Bitcoin just shattered past $123,000, marking a meteoric 65% rally since April. And it's not just about short squeezes or retail hype. Behind this surge are massive institutional ETF inflows, a powerful legislative wave in Washington, and the creation of the first-ever strategic Bitcoin reserve backed by the US government. This rally is not just a reaction to price action. It's a signal that Bitcoin is shifting from being a speculative asset to a legitimized pillar of global finance. And here at CashCore, where narratives matter as much as numbers, we're pulling back the curtain on what really changed, and why it may never change back. Since the start of 2025, Bitcoin has been gaining momentum fast. In just one trading day, US-based spot Bitcoin ETFs recorded over $1.18 billion in inflows, pushing their total yearly inflows to more than $50 billion. That's a staggering figure, eclipsing previous years and rivaling traditional gold ETFs. BlackRock's iShares Bitcoin Trust alone now manages nearly $90 billion in assets. Institutional whales, hedge funds, pension groups, sovereign wealth entities now collectively hold an estimated 3.5 million Bitcoin. And as they deepen their holdings, they are pulling Bitcoin further away from its volatile, retail-driven past and into a more strategic role. But this isn't only about big money. A massive short squeeze also played its part. In early July, more than $1 billion in short positions were liquidated in a 24-hour period, forcing traders to buy back Bitcoin rapidly. This sudden burst of demand pushed prices upward at an even faster clip. Combined with the optimism surrounding Washington's crypto week, the market reached a euphoric state. For the first time, investors, analysts, and lawmakers were moving in sync toward the same belief. Bitcoin is here to stay, and it's evolving. The most important factor behind the rally, however, isn't the market, it's the US Congress. During Crypto Week, lawmakers advanced 3 major bills designed to finally give cryptocurrencies legal and regulatory clarity. Most significant is the Clarity Act, which officially categorizes Bitcoin and Ethereum as digital commodities under the jurisdiction of the CFTC. This move removes years of confusion over whether crypto assets are securities, commodities, or something else entirely. The bill also allows blockchain-based companies to raise up to $75 million per year in capital without having to register their tokens as securities, provided they meet certain transparency and compliance criteria. This opens the floodgates for startup innovation, while giving institutional players the regulatory safety net they've been waiting for. In tandem with the Clarity Act, 2 other pieces of legislation were introduced. The first, known as the Genius Act, imposes strict reserve requirements on stablecoins and allows federally regulated banks to issue their own digital dollars. The second bill, the Anti-CBDC Surveillance State Act, prohibits the Federal Reserve from developing a retail central bank digital currency, arguing it would infringe on personal privacy. These 3 bills together represent a full-spectrum approach to crypto legislation: asset classification, stablecoin security, and financial privacy. For the first time, the US is laying down a cohesive crypto roadmap. While the news of Crypto Week sent Bitcoin to a new all-time high of $123,153, political delays quickly reminded investors that nothing in Washington moves without friction. The House failed to pass the Crypto Week legislation in a 209 to 220 procedural vote, stalling forward momentum. Some Republican members pushed for amendments, and a handful of Democrats expressed concern about gaps in enforcement authority between the SEC and the CFTC. In response, former President Trump publicly called for urgent approval of the bills, rallying party members to back the effort and labeling the crypto agenda as a matter of economic leadership. Despite the setback, optimism remains high that the legislation will pass in the coming weeks, and the slight pullback in Bitcoin's price, down to the $118,000 to $119,000 range, is seen more as a breather than a reversal. Beyond the halls of Congress, another major development has captured attention. The U.S. Treasury, after seizing nearly 200,000 Bitcoin from criminal investigations and fraud cases, has decided not to auction off the assets as in the past. Instead, these holdings will be added to what officials are calling a strategic. Still, risks remain. Technical analysts point to Bitcoin's rising daily volatility index and narrowing Bollinger Bands, which often indicate an incoming correction. Hedge funds have already begun advising clients that a 10 to 15% pullback could occur if legislative delays persist or if broader market conditions tighten. And not everyone is sold on the Clarity Act's long-term effectiveness. Some regulatory experts argue that creating a split between the SEC and CFTC could sow new confusion, especially for hybrid assets that blur the lines between utility and investment. If the agencies don't coordinate well, we could see inconsistent enforcement and legal battles that slow down the very growth the bill is trying to accelerate. There's also the risk of geopolitical instability. As Bitcoin becomes more embedded in state-level strategies, it becomes vulnerable to political shocks, economic sanctions, and diplomatic chess. If another country weaponizes Bitcoin or if U.S. holdings are seen as overreach, global backlash could create volatility. Investors should prepare not only for price swings, but for a new era of Bitcoin being tied to national identity and international diplomacy. So where does this leave you? For most investors, the path forward involves a mix of caution and readiness. If you're considering exposure to Bitcoin, now is a good time to look into regulated ETFs rather than raw spot holdings. These provide security, liquidity, and compliance without the hassle of private keys or custodial risks. For active traders, setting alerts around legislative updates is key. One headline could swing the price $10,000 in either direction. And for long-term holders, it's time to reframe Bitcoin not as an alternative asset, but as a foundational pillar of modern macroeconomics. The $123K mark was a headline, but the real story is what's building beneath the surface. Legal frameworks, government interest, institutional capital, and sovereign strategy. Bitcoin has evolved, and the world is beginning to evolve with it. And somewhere between law books and ledgers, between Congress and cold wallets, a quiet transformation has begun. One that doesn't just move markets but redraws the architecture of trust itself. It's not about who got rich first. It's about who understands what comes next. Because in this new financial era, shaped in part by shadows and sovereignty, not all revolutions scream. Some simply settle, block by block, into the heart of a system we thought we already knew.